Guys, welcome back to a brand new video. I'm RexFinance, and wow, Bitcoin continues to be 50% off of its all-time highs. The pure play Bitcoin mining companies like RIOT, Marathon, and CleanSpark are all 50% plus off their all-time highs as well. There's an all-out war going on when it comes to the Bitcoin universe, where we're still fighting about environmental concerns, and we're fighting to get an SEC-approved Bitcoin ETF. As an industry, lots of cryptocurrency investors are looking for some answers right now. In today's video, I'm going to be discussing why Bitcoin investors have it all wrong. Now, the basis of this video is going to be around MicroStrategy and all of the pure play Bitcoin mining companies and how the vast majority of money is going to MicroStrategy when I think it's obvious that money should be going to the pure play Bitcoin mining companies. I'll be explaining all of this in today's video, and as always, on Fridays, I'm going to try and keep this video relatively short because I know people have other things they'd like to do other than watch a RexFinance video on YouTube. Before we get into this, I want to say thank you to Rob and Zeke for recently subscribing to the channel. I also want to say thank you to Abra for upgrading your Rex Nation membership, and I want to say thank you to Just Trying to Be Funny for joining Rex Nation for the first time. If you guys are interested in getting my buy and sell alerts, extra access to me, all of that good stuff, there are two ways you can do that. First, by hitting the join button down below, located right next to the subscribe button. If you don't see that button, hit the Patreon link down in the pinned comment. Without further ado, let's go ahead and get into this. So to start off this video, it's important for me to note that BlackRock and Capital Group, which are two very, very large investors on Wall Street, own over 25% of the company MicroStrategy. We can see that per a recent SEC filing, the firm Capital Group has purchased around 12% of MicroStrategy's common shares. In addition to the 12% of MicroStrategy that Capital Group owns, the firm BlackRock owns another 14.5% stake in MicroStrategy. In today's video, I'm only going to be focusing on BlackRock because they are the larger shareholder in MicroStrategy, and it's easy to look through their filings at their stock holdings and really break down what I want to mention in this YouTube video. So why would these huge investment firms want to buy MicroStrategy? MicroStrategy's underlying business has lacked significant growth for years now. However, MicroStrategy's CEO, Michael Saylor, has been using the company's cash and profits to buy Bitcoin. The reason BlackRock and Capital Group are buying such huge stakes in MicroStrategy right now is not because of that underlying business. That underlying business has lacked growth for years, as I've already mentioned, but it's because they want that exposure to Bitcoin, because as an investment firm, it's almost impossible to get proper exposure to the cryptocurrency because we still haven't gotten that SEC-approved Bitcoin ETF yet. Over the past few years, MicroStrategy's Bitcoin stockpile has grown to over 105,000 Bitcoins on their balance sheet. That is a ridiculous number and by far the most Bitcoins held by a public company in the entire stock market. But now I'm going to be discussing why these Bitcoin investors have it all wrong. They are wasting so many dollars in investing in MicroStrategy when the pure play Bitcoin mining companies are clearly the better choice in my opinion. By the way, at the end of this video, I want to hear from you guys and whether you agree with me on this or not, so leave a comment down below. But now let's go ahead and start looking closer at BlackRock and their holdings. We can see that they own over $750 million worth of MicroStrategy, which again is almost a 15% stake in the company. But to be fair to BlackRock, they also own RIOT, Marathon, and CleanSpark, which are the three pure play Bitcoin mining companies I'm going to be talking about in today's video. BlackRock owns about $75 million worth of RIOT, $76 million worth of Marathon, and only $12.5 million of CleanSpark. So what's the big deal? Obviously, BlackRock is heavily invested in these other pure play Bitcoin mining companies, and they're not putting all of their money into MicroStrategy. Well, the big deal is these three investments only add up to about $160 million invested combined between the three companies from BlackRock. And when we go back and look at the amount of money BlackRock has invested in MicroStrategy at over $750 million, their investment in RIOT, Marathon, and CleanSpark combined looks like ants next to the Eiffel Tower. So you may be wondering again, okay Rex, so what's the big deal with this? Well, the big deal this time is that MicroStrategy is paying full price to get these Bitcoin on their balance sheets. MicroStrategy does zero mining. The recent announcement that MicroStrategy put out is that they paid $37,000 on average for their Bitcoin. So the big deal is there's clearly a narrative that Wall Street doesn't understand in relation to the Bitcoin industry. And honestly, I think that's the major reason the pure play Bitcoin mining companies have hurt so much in the short term. It's because Wall Street does not understand this industry yet. But when they do begin to understand what's going on here, watch out. These stocks, RIOT Blockchain, Marathon, CleanSpark, all the other pure play miners out there are going to start to perform really, really well. To dig into this deeper, I've already stated that MicroStrategy pays full price for their Bitcoin. They do zero mining. But on the other hand, these 3 pure play miners are paying less than $10,000 per Bitcoin. That's because they're physically mining these Bitcoin and they're not paying to buy these Bitcoin. Their expenses to mine the Bitcoin amount to around $10,000. In CleanSpark's case, they're actually mining Bitcoin for less than $6,000 on average. So when you compare that to what MicroStrategy is doing, MicroStrategy is paying $37,000 on average per Bitcoin, while at the same time, CleanSpark is paying under $6,000 to put that same Bitcoin on their balance sheet. So my question is this: why don't RIOT, Marathon, and CleanSpark and the other pure play miners amount to a much bigger investment than BlackRock's investment in MicroStrategy? Why not buy the companies that have the 100% certain profit margin on their Bitcoin mining for that same Bitcoin? Well, there's a couple of different reasons that I have thought about personally. The first reason that I thought about is, okay, maybe MicroStrategy's share price is a little bit more safe than these other pure play miners. But when I dug into this deeper, we can see that since June 29th, MicroStrategy is down 21.81%. If we look at CleanSpark over the same time period since June 29th, CleanSpark is down 19.83%. So CleanSpark is outperforming MicroStrategy. And then over the long term, if we look at the stock chart, we can see that MicroStrategy's share price is negative over the last 6 months, down almost 12%. To put this into perspective, RIOT's share price over the same past 6 months is up 8%, outperforming MicroStrategy by 20%. It doesn't stop there. Marathon, for example, over the last 6 months. Marathon is up over 4% over the last 6 months. So even Marathon is outperforming MicroStrategy by 16% over the last half year. So all of a sudden, that idea goes out the window. The second possibility that I thought of is that, okay, maybe BlackRock wants to own MicroStrategy because of the amount of Bitcoin they hold on their balance sheet. Again, MicroStrategy owns over 105,000 Bitcoin on their balance sheet. That number far outweighs any of the pure play miners and how many Bitcoin they hold on their balance sheet. But then I got to thinking, it doesn't really matter how many Bitcoins a company owns on their balance sheet. If the price of Bitcoin goes up 10%, well, that means every single Bitcoin's value goes up 10%. So theoretically, no matter how many Bitcoins you own on the balance sheet, the market cap is going to be affected in a very similar way, no matter the size of the company. The only possible reasoning I can think of is in the case that all 3 of these companies go bankrupt. Say MicroStrategy goes down, goes bankrupt. CleanSpark, RIOT, Marathon, all 3 of them go bankrupt. Well, then as these companies go bankrupt, by owning MicroStrategy, when it's all said and done, BlackRock would be able to claim more Bitcoins because of their ownership in a company that overall owns more Bitcoins on their balance sheet. But at the same time, this doesn't even make sense, because if these companies are going bankrupt, it likely means that Bitcoin prices have gone to zero. So in this case, why would you even want to own worthless Bitcoin after a bankruptcy of a company? So all in all, I think there's a big misunderstanding on Wall Street of where they should be putting their money to properly invest in Bitcoin. In my eyes, the pure play Bitcoin mining companies are the far better investment than putting their money in MicroStrategy. Both RIOT and Marathon have outperformed MicroStrategy's share price over the past 6 months. CleanSpark has outperformed them since June 29th, since the Chinese crackdown occurred. So with the in-depth research that I have done, I have not been able to properly understand why Wall Street is choosing to buy MicroStrategy more heavily than these other companies. It just doesn't make sense to me. It's clear as day to me that the better investment is buying the pure play miners. Again, I want to know what you guys think down in the comment section below. Am I missing something big here? Am I going crazy? I want to know. But I think as Wall Street kind of opens up to this fact that MicroStrategy is having to pay full price for their Bitcoin, while these other companies have a profit margin and are able to add the Bitcoins to their balance sheet for a major discount in comparison to MicroStrategy. But again, I think if I am right about this, Wall Street is going to wake up to this. And all of a sudden, the money's going to be flowing back into the pure play Bitcoin mining companies. It's all a matter of when Wall Street starts to understand this narrative. But anyways, that's all I have for this video. If you guys enjoyed, hit that like button down below. If you guys are new here or returning and not yet subscribed, feel free to hit that subscribe button down below. With that, I'll be back with a brand new video on Monday. Have a great weekend. Peace out.